When large jobs require moving massive amounts of snow, get the work done quickly and efficiently with the Western Pile Driver and all-new Pile Driver XL pusher plows, both featuring Trace Edge technology. These pushers scrape down to the pavement with an advanced cutting-edge system that has independent 2-foot sections that move vertically, oscillate, and trip. Get more jobs done faster with the Western Pile Driver lineup of pusher plows.
Mike Bott from Frost Solutions, one of the owners of the company. What we do is provide a mini weather station to give you a tailored forecast to those particular locations so you know where and when and what to do in those parts of town. You know there's 2 or 3 or 4 or 5 different ways that people can experience tremendous value having a technology like this.
Welcome to the Entrepreneurial Journey with your host, Dave Westcott. The Entrepreneurial Journey is a weekly podcast that streams live every Tuesday at 9:15 a.m. Pacific on Dave's YouTube channel and LinkedIn profile. Now here's Dave with this week's episode.
Good morning and welcome to the Entrepreneurial Journey. I'm your host, Dave Westcott, and I have with me this morning special guest, Ed Harris, founder and CEO of Harris Northwest Advisors. Ed, good morning.
Good morning, Dave. Thanks for having me here.
I'm glad that you are here, and it's always good to see you and chat with you, and talk about business, which is what we all love. And you have quite an interesting entrepreneurial story, as you were in the acquisition business. You're in the M&A business, the selling of your business to PE firms business. Is that's right?
Yep, more or less. That's
more or
accurate.
Less. Yeah. And that's what I think all people kind of like have this vision of this big pot of gold at the end of the rainbow. They've worked so hard and they've bled and they've sweat and they've had tears running down their face at more moments than they want to admit. And they're looking for somebody like you to help them get that big pot of gold. How did you get into this?
Kind of happenstance. Just, I think a lot of people, life sometimes has turning points and coincidences that you didn't plan for. But I think in general, I was always interested in business and finance. As a kid growing up, I had a grandfather who was an institutional broker on Wall Street. So kind of picked up a little bit of the world of, now, of course, everybody follows everything, crypto, stocks and bonds, all that information is out there in front of us all the time. Back then, it was a little bit less common to be well-informed about, the stock market and business headlines. So having a grandfather that was on Wall Street was sort of maybe just kind of influenced me, I would guess. And then my dad was an entrepreneur. He had a small business. He started a small business when I was about 12 years old. And so it was sort of like, I would say maybe not so much inspirational, but more of like, that's something you can do in life. You can start a business. So I would say that was probably some of it, but some of it was also just happenstance because I moved to Seattle in 1990, and Seattle is a very entrepreneurial part of the country. And if I hadn't moved here, who knows, I would have just maybe stayed in the corporate world and put that whatever allocation of my 401k every year and got that match and just been happy with the corporate life. So I think, part of it was just the coincidence of coming to Seattle and getting exposed to like, holy cow, this is a very different business community than New York.
That's interesting. Seattle versus New York. I guess, what are some of those big differences?
Well, I'll give you an anecdote that I think illustrates it. So New York is very status conscious. There's a lot of emphasis on what neighborhood you grew up in, what town you grew up in, what college you went to. Even within the Ivy League, it's like, oh, well, you didn't go to Harvard, Yale, or Princeton. So yeah, you went to like a lesser Ivy League school. There's just all of this emphasis on how you dress, what your clothing looks like. And I came out here to Seattle and I saw Howard Schultz in a Starbucks wearing blue jeans. And I just thought to myself, this is already, even back then, the guy was a billionaire. And I thought, I've got this boss, who makes maybe, and it was big money, like at the time. I got this boss that maybe makes $500,000 or $1 million a year, who thinks he's the biggest deal in the world. And I'm going to get hell if my, tie isn't like, knotted the right way, or my suit doesn't look like it's the highest grade of fabric. And here's Howard Schultz in blue jeans. He's a billion. I've seen Steve Ballmer in a Starbucks. He's worth like, 100 or 200 billion bucks. And then you just realize, like, wow, a lot of this stuff that seemed so important in New York just doesn't matter if you've got an idea and you're entrepreneurial and you can attract capital and you have energy. By the way, I'm not anywhere near I'm a million miles away in terms of financial achievement of a Howard Schultz or a Steve Ballmer, but it's just more that idea that who cares what kind of pants you're wearing if you're smart and hardworking.
So you can be a guy in a flannel shirt making $1 million in Seattle, but in New York they might not serve you coffee at the
exactly
at the local shindig.
Yeah, exactly.
Very interesting. And you started your career out on Wall Street.
Yeah, absolutely. So I got an MBA. My timing was very lucky. There have been certain professional paths that at different points in time have been very lucrative. Up until about a year or two ago, it was computer science for the last 15, 20 years. If you came out of a top ranked computer science program, the big tech companies would gobble you up with, big compensation packages. So I just got a little bit lucky. I went to business school at a time that Wall Street was really beginning to revolutionize, going from an old-fashioned clubby kind of environment to what the early manifestation of what Wall Street is today, which is just super, data-driven, information-driven. So there just was a real appetite for talent in those days. And I just, in a sense, got a little lucky that I came out of business school when Wall Street was snapping up MBAs, much the same way that, Facebook and Google were snapping up computer science majors 4 or 5 years ago.
When I think of Wall Street, I think of movies like Wolf of Wall Street, right? Or what's the one with Bud? I can't remember. It's gonna slip my mind. Ralph, you're a movie nut. You might not know a cool movie. No, I'm just kidding. That was just joking with Ralph because he's passing on me. What's the Wall Street movie with Bud? He's Ralph. It's anyway. Doesn't matter. Bud, he's the guy. He's working for Michael Douglas. It's Charlie Sheen. He's going. He rips his dad airline apart.
Yeah.
Right. Butchers his dad, and then he goes to prison.
I remember that movie.
Is it just called Wall Street?
Might just be called Wall Street.
Okay, Wall Street. We're just gonna go there. It's Wall Street. We're gonna go Wall Street, and we're just gonna call it Wall Street. So when I think of like working on Wall Street, I think of movies like that, right? Wolf of Wall Street, whatever. Is that how it is?
So here's the movie you should be thinking of. I don't know if you ever saw Working Girl. Did you ever see Working Girl?
I've seen Working Girl.
So Working Girl was actually filmed in the offices of the firm I used to work at, and it perfectly captured the atmosphere, because just by coincidence, the building I worked at was at the very southern tip of Manhattan, which is where the Staten Island ferry is. And so they were called secretaries back then. I guess the term now is administrative assistants. But every morning, a couple of thousand secretaries would be coming off the Staten Island ferry, and they had, they just had a particular style of how they did their hair and how they dressed, and their accents. New York, the Northeast is a place with lots of different accents, and then they would come into this office environment, and they'd work with the people I was describing that had, the ties, the particular style of suits and ties. And if it was women, the particular style of dresses. And there was this unbelievable culture shift, or culture difference between the two people working side by side. So you had the Staten Islanders and the people that thought of themselves as like, I'll say elite, very inflated egos. And then at 5 o'clock in the evening, they'd go back, to the Staten Island ferry and go back to Staten Island. And so when I moved to Seattle, I actually told people, because Working Girl had only come out like right around the time I had moved, I'd said, watch that movie. That one really that captures the, the culture
Very
clash.
interesting. Okay. I'm gonna go rewatch that because that's cool. So, it's just so interesting that, you came from Wall Street, you moved to Seattle, and as I think about it, when you're at Wall Street, the work-life balance, people talk a lot about work-life balance, and obviously you have seen many businesses, you've advised many businesses, you've been a part of some massive transactions, with people selling their businesses. As an entrepreneur, is there really a world where you can build a big successful business and really achieve work-life balance? Can you really only work 40 hours a week and meet every baseball game and take every weekend off and take 3 weeks of vacation? Do you see that in any businesses, or would you say that's more of a myth?
I've never seen it.
You've never seen it.
I've never seen it.
And so what you're saying is that if you want that pot of gold at the top of the mountain, the idea of work-life balance isn't really real.
I would say it's not real until you put in about 10 to 15 years of no work-life balance.
So you work to no life balance, because it's interesting because, it's something that I see, and I shot a little post out on LinkedIn some time ago and got a lot of flack on this one. And it was talking about, work-life balance, and, somebody on that, made a post, or they made a comment on there, and they said, I'm off every night at 4 and I'm at every weekend I'm at the beach. And I said, my response was, that's awesome. That's a lifestyle business. And I believe if you build yourself a lifestyle business, you can create those pockets of life, but it's not an empire. And the person responded back and said, I'm building an empire. And I just let it go where it was. And I was like, that's awesome. But in my mind, I was like, no, there's no way.
Mm-hmm.
There's no way. I've never seen it in every franchise that I've been a part of, in every business that I've been a part of, the hundreds of entrepreneurs that I've met on this show, the thousands of entrepreneurs that I've met along the journey in trade associations. Like, the top guys always grind and they always sacrifice. And it's interesting because at Wall Street, to be a top dog at Wall Street or to survive in that, like, those are grinders.
Mm-hmm.
Those guys, I mean, correct me if I'm wrong, but if I'm on Wall Street and I really want to be a top player, I'm gonna work 18 hours a day, 16 hours a day.
Maybe not quite 18. I would say probably it's 14, maybe
14. Okay,
on average.
So average of 14 hours a day.
Yeah, but so again, it's front loaded at the start of your career. So if you look at the way these organizations are structured, they're pyramid structures. So you have a lot of young people. I mean, relative to the size of the organization,
Yep.
you have more young, recent hires. And by the way, the big law firms are exactly the same way. The number of people at the bottom way outnumber the number of people at the top. And then it's a pyramid structure, and you grind for the first, let's say maybe call it, 10 years or so. And if you stay in that environment, at a certain point, you're at your Hampton house on the weekend, and the young associates in the office.
You've built your empire.
You've built your empire inside the organization. You've reached a level of seniority, but those environments are still very corporate. They're still corporate environments. You're still working in a big company, and you're not. I mean, you're making. It's kind of a little bit of a seductive trade because you're making a lot of money. Like, a well-paid lawyer or banker in New York is making a 7 to 8 figure compensation package, which is pretty hard to be dissatisfied with. But but you still don't control your destiny. And funny enough, I was just talking to a friend of mine we were both first-year associates in 1985. So I'm kind of dating myself how far back this goes. But we were both first-year associates at the old Solomon Brothers, which at the time was the largest firm on Wall Street. And we hadn't talked in a while. And he was mentioning what he's doing now, and he left a pretty good job that he had. He said, I just want to have more control over my time. Now, like me, he's much later. He's gone further in life, but that's also, I think, part of that. You call it the entrepreneurial journey, is the sense that you're in control. There isn't a boss who's call you into his office, her office one day and say, sorry, Dave, sorry, Ed, we're going in a different direction.
Here's your watch. Here's your check.
Yeah. So part of that entrepreneurial journey is if you're broke and you failed, at least you did it. Like nobody did it to you.
Yeah. That's very, very true. And you've been at this a while now, like you mentioned. And as you look back at entrepreneurs and people who are building their business, and you think about everything you've seen, everything you've accomplished, amazing things on your bio, right? Just the stuff that you've been able to accomplish over the years. What advice do you give to the young entrepreneur who's building a business and raising a family and is torn between that balance of my wife wants me home, I don't see my kids, I'm working hard, is this worth it? What do you say to them?
Well, so far nobody's asked me nobody's asked me for that advice. But just hypothetically, if somebody were to ask me, I would say, like everything else, life is a bunch of trade-offs, and you just have to figure out. Nobody can do everything, right? You can't have it all. Life is going to be a series of trade-offs. I would say in my case, my trade-off was putting in those first 10 or so years of really, grinding and working the long hours and lots of travel and, very stressful, but then getting to a point where, the organizations had more critical mass, and one person's contribution became less important. And part of it also was just, I got lucky. I was with some companies, parts of some companies that were, at various moments in time, highly valued and people wanted to buy them. One anecdote I'm fond of telling is Mark Cuban, who's, incredibly famous and incredibly wealthy. His venture, broadcast.com, was purchased by Yahoo for roughly $1 billion. And this is going back 25 years, 30 years, when $1 billion would be $5 billion today. And Yahoo ended up shutting it down completely. They paid $1 billion, $1.5 billion for Mark Cuban's business. And, 2-3 years later, they thought this thing's worthless and they shut it down. And Yahoo itself is, I guess they exist. I'm not sure who owns them, but they're a fraction of what they once were. So right. I think some of it is just, luck and timing and just being, having the right idea or the right opportunity and when the market is ready for it.
That's good advice. You moved to Seattle in 1990. You were CFO of 3 startups, each of which reached a nice exit. You were a part of a wireless company that was acquired by AT&T for $400 million, an internet company that was bought by Disney for $1 billion, and an online high school that was also purchased. Is that kind of what gave you the taste for mergers and acquisitions?
No, that's what I was doing at the start of my career. That,
okay.
that was right out of business school. That's what,
okay.
Yeah.
So you jumped right in. You jumped right into basically M&A.
Yeah.
And you were go. And then you come to Seattle and you take a financial position.
Mm-hmm.
And then you said, okay, that's done. And then you went back into.
Well, it's kind of a little bit more of a not quite a straight line.
Okay.
So what happened is, I moved to Seattle actually, so I didn't have to work 100 hours a week anymore.
Okay.
So my wife and I just had our first child, first of 3. And what you were saying a few minutes ago about missing all the, missing, family dinner and missing the practices and missing the school drop-offs and all that. I said, I don't want to miss this. I want to be there as my kids are growing up. So we moved to Seattle and I took a finance job. And I was doing the same thing I was doing on Wall Street, but I was doing it, in an 8 or 9 hour day instead of a 14 or 15 hour day. And I was very comfortable with, dialing back on my ambition. So I was like very intentional to not be quite as ambitious as I was. And then just because I moved, the timing of when I moved to Seattle, the tech explosion was really starting to happen. It was just very early on. And through a connection, a startup company needed a CFO, and I thought, well, let me
Let me throw my hat in.
yeah, let me take that gamble, and so it was sort of just kind of a little bit of a coincidence that I knew somebody that could get me that first foot in the door of that tech startup world. Which, when I moved to Seattle, we lived in a suburban community in Issaquah, which for your listeners and viewers is a suburb of Seattle.
Yep.
And I'd say every other dad worked at Boeing. It was like that was Seattle back then.
Right. That's very true. Yeah. Boeing was a whale.
Yeah. Yeah.
Boeing was a whale. And look at how Seattle has diversified.
Yeah.
With Amazon, Microsoft, just wow, amazing, right?
And then just kind of carrying on to answer that question. So we got acquired, and then I was kind of like again, this is like Mark Cuban times, divided by 1,000. I'm not comparing myself to that level of success, but if you're part of a deal that ended successfully, people kind of think like, oh, you're special too. So once you get that first, I'll call it like highly visible to the outside world. I mean, to the local business community. Once the people in Seattle see like, oh, you were part of this successful deal, then your stock kind of goes up reputationally. So that was a little bit lucky. And then the next one, again, a little bit lucky, Disney. I was part of a company that Disney wanted.
Yeah.
Yeah. It was good timing.
That's awesome, man. Like, there's some luck involved in there. And, one of the things you said, hey, I'm not as successful as Mark Cuban or whatever, but it's interesting because at this stage in my life, I'm watching my dad pass away. And, he had a stroke sometime, about a month ago, and very sick in the hospital. We'll probably never make it out of the hospital.
Oh my gosh, I'm so sorry to hear that.
Yeah, thank you. And but I'm watching that, and it's interesting because you watch who comes by the hospital. You watch who comes and spends time with him. You watch where he's at in the hospital. The food he's being given, the whole process. And at the end of the day, you're just alone. He's still alone, even though my mom's there, even though I go and see him, even though no matter what you've accomplished, my dad did some amazing things. He worked for a company, Bechtel, which is one of the largest privately held construction companies in the world.
They're gigantic. Yeah.
Right. There was a big contest with engineers that came from all over the world, and they had to do this design, and it was graded. And my dad was rated as the third greatest engineer in the world at one time.
Wow.
Right. And
wow.
He won this award, and they sent him this big crane and all this kind of cool stuff. And you think about all the things he did and all the things you did with him and all of that. But at the end, we all go the same way. And as I've been watching this in step-by-step progression, I'm beginning to think about success differently. Like, success is awesome and money in the bank is good. But at the end, it doesn't matter how much money you have in the bank. And so the real fulfillment and joy and success in life really is about how well you lived life.
Mm-hmm.
That's really what I'm thinking. And that's kind of off topic, but I think that it sounds like you made some really good decisions to not miss the drop-offs, to not miss the plays, to be there and to be present, with your kids. And that almost feels like the biggest win of life. I don't know. That's how I look at it. I mean, am I on the right path, or you think?
Yeah, I mean, I think, I really, intentionally made, I'll call it financially self-limiting decisions for things that I just decided family was going to be a higher priority. And again, I'm not on food stamps. I'm doing okay.
Yeah.
I mean, I'm not, I'm doing just fine, and I don't have any regrets in life, but there were certainly moments in time that I just I'm going to make some choices that are going to prioritize family and might be somewhat self-limiting in terms of the opportunities that are in front of me. And I don't regret it for a second.
That's amazing.
Yeah.
It says a lot about you. I love that. I think just what you've accomplished and built is amazing.
Well, thank you. It's me saying it though. So it's, you could ask my family members whether that's how they perceived it, but that's to me how it felt, like I'm trying to make them a priority.
I think the sacrifices that you made are real to them. And, the sacrifices that, they get made, are sometimes perceived differently. I remember that, my dad decided to be an entrepreneur at one point, and he left working for Bechtel, and he wanted to build his own company. And, he failed at that company.
Mm-hmm.
He ended up losing it, ended up filing bankruptcy. And this was late in his career. And I think at like 65 years old, he went and took a job at Todd's shipyard doing manual labor.
Wow.
He had to get up at 4 a.m.
Wow.
Take a ferry, be at work at 7. Took him 3 hours to commute. Then work till 4. Then 3 hours home. He wasn't there.
Mm-hmm.
And as an older man, like he was so beat on Saturday, like I remember him just laying there. He couldn't move, Amazing sacrifice that, he did for us because he had to, because things didn't go right. And I could easily look at that and say, Dad, you didn't come to my sports game on Saturday. Dad, you didn't come to lunch with me. Dad, you weren't here for this. Or I could look back and I could say, man, I can't believe what you went through to put that roof on our head. So I think we all have that, that perspective that, what does success look like? And what does that feel like? And I think as humans, we make the best possible decision we can in any one of those moments. But that's my thought on success and kind of, what I saw my dad go through and everything like that. And, but at the end of the day, it is what it is, right? We just do the best we can. And I think that's what you've done in your life.
Well, and you don't get a chance to go back, and if you think you made a mistake, you don't get a chance to go back and undo the mistake you made either. That's the other thing, is you're always dealing with limited information. You don't know what's going to happen in the future. You don't know how things are going to play out.
You don't. So you're on the journey, and then you become a part of a small team of professionals that manage the venture capital portfolio of Microsoft co-founder Paul Allen. That sounds pretty awesome.
It was kind of like running away to join the circus.
Okay.
Again, this is just kind of good luck. Paul Allen's been gone for a few years now.
Yeah.
But at the time, he was the second wealthiest person in the world. So it was usually every year it would be either Bill Gates, Warren Buffett, and Paul Allen, or Bill Gates, Paul Allen, and Warren Buffett. Those were the top three,
right,
for like around 10 years in a row. And when you're that wealthy, the world that you circulate in is just filled with A-listers of every possible type. And so part of it, for the first couple of years, it was just like, wow, this is really cool. I just got off the phone with Dan Aykroyd,
That's pretty cool.
Yeah. And so that was fun. And he had a tremendous just interest and creativity and a passion about a lot of different things. So that was pretty cool too. And then in March of 2020, the NASDAQ started the dot-com bubble. The air started coming out of the dot-com bubble. And once Microsoft stock started to go down in price, and all of his dot-com investments started to lose value, it suddenly became a lot less fun, because it's really fun when you put let's say 10 or 20 or $50 million into a company, and then like a year later, it's 10-tupled in value.
Yeah.
That's kind of fun. And then
Right.
when a year after that, it's gone back to its original starting point or maybe lower. So I have to say it was a lot less fun when the dot-com bubble popped, working for a guy who invested in tech.
So you've seen all sides of it.
Yeah.
And through that experience, you come out and you decide to found Harris Northwest Advisors, a boutique investment banking firm that specializes in representing the sellers of privately held companies in the lower middle market, typically with revenues between 10 and 250 million. That's where you land.
Kind of. So I'll just amend that slightly. So I did, I had the kind of record an entrepreneur. I wasn't always the company founder. I was the company founder or co-founder a couple of times, and a couple of times I joined, after the company had already gotten going as part of the management team. But at a certain point, I had a couple of failures, a couple of, let's say, things that didn't pan out. And my wife said to me, you didn't ask me this question, or when you asked me the question, I wasn't thinking of it. You asked, like, what advice would I give a budding entrepreneur? Is if you're going to get married, marry somebody who's smarter than you. That's that's probably the one piece of advice I could give.
That's great. That's great advice.
And, my wife had seen my various ups and downs professionally. And she said, why don't you go back to, go back to your roots, go back to, what you really know and what you're good at. But I'm sanitizing how she said it. She didn't say it quite as politely as that. And then by coincidence, a friend of mine said, hey, I've got a company that I'm an investor in, and we need to sell it. And I probably need to find somebody like you with, your kind of background to help me get it sold. So it was just sort of like, the two things happened more or less at exactly the same time. Like my wife telling me to go back to what I really was, trained in. And then a friend calling me to say, oh, by the way, I got a business. Could you help me sell it? And so that was sort of the genesis of the firm. So it was a little bit, even then it was a little bit, coincidental and accidental. But then once I got back into it, it's like, yeah, this is what I went to business school for, many years ago. And what I did those 100-hour weeks on Wall Street, training professionally. And so it does feel like a very natural fit. Like, yeah, this is stuff that I don't really understand technology. I worked in tech companies, but I was never, technically proficient myself. I can't write code. I don't really, I rely on other people to explain to me how stuff works so I can do my job on the financial side of the business. So this is really comfortable for me. It fits.
You're in the right lane.
Yeah.
You're in the right lane. And so talk to us about what Harris does today. Like, what is it? What kind of clients do you work with? How does it work? How does someone, think about starting a business? I know that's like 3 or 4 questions. I mean, not starting a business, but how does somebody get into that process of selling their business? What do they need to do? How does that happen? So on and so forth.
Yeah. So, it's a great question, Dave. I would say the first thing is be successful. Like there's no one like particular formula to follow. There's not like, here are the 10 easy steps or here's the 7 steps. It doesn't matter what you're good at if you're successful at it. And there's an analogy I like to use, which is a lot of people most people somewhere in their portfolio have an S&P 500 fund. That's the most popular investment, that people have for building their 401k or their personal portfolio of Fidelity or whatever. And if you look at the S&P 500, you see this incredible diversity of companies. You have Microsoft and McDonald's and Marriott and General Motors and Meta and Home Depot and Walmart. And you can say, well, what's the common unifying theme? Why are McDonald's and Microsoft in the same investment vehicle? And the unifying theme is because they're large, successful companies. And the S&P 500 is a collection of the 500 largest and most successful publicly traded companies. And so it's no different in my world, in the private market. it doesn't really matter what business you're in if you're successful at it. If you're successful at it, then you have value and you're going to be attractive to people who are looking for value. So that there's no like, there's not a particular formula per se. It's more be successful, and at an appropriate level of success, the world is big enough that if you're a specialty chemicals company, somebody's going to want to buy. I'll give you an example of some of the clients we've had. We had a company that was in the online wellness space. Their most popular courses were yoga and mental and emotional well health. They were run by a brilliant tech guy and just really disciplined in terms of how they measured their return on investment of the courses that they developed. And we sold them to a big publicly traded company that had a health and wellness division. This was a relatively small company, under 30 million in revenues, but really unusually profitable because of the financial discipline and technology that the founder, it was actually a husband and wife team. The wife was more of the product visionary. She was the one that was more into the wellness field, but her husband, who had come out of tech, was able to build a technology infrastructure around their business, and became very successful. Another client of ours had a similar kind of dynamic. In this case, it was two brothers. It was not a husband wife. It was two brothers who were incredibly close. I mean, it was a healthcare company, and the one brother was a doctor. The other brother was a mechanical engineer. And so the doctor's passion for what he was doing, which was a very unaddressed intersection of healthcare. And then the other brother, who was an engineer who custom built all the technology to allow them to scale. So just to give you an example, if anybody's ever gone to a doctor's office or tried to call their doctor, getting a hold of them is not easy. And so they made it into a religion that if the phone rings, somebody picks it up within 2 or 3 rings. That was like a religious discipline that the engineering brother put into their company. We're going to have a phone system where it's going to roll over, and then it's going to roll over again, and then it's going to roll over again. But your phone call is going to get picked up on the 3rd ring, and whoever picks it up has a phone that displays your profile with all of the information about you and that level of touch. And so that was just like an incredible combination of good healthcare, but also just really smart business, discipline. So, and I know your business, you're in something that a lot of people would consider to be unglamorous and maybe don't even know that much about in terms of snow removal, but you've been successful. And when you're successful, again, it doesn't matter how you got there. It's what the level of success is that you get to.
I love it. When you look at success, for anybody who out there who's thinking about, oh man, I would love to connect with, Ed and his team and, build my business. Is there a couple of metrics out there that, define success, or that, that show, hey, this is a successful business? Is there any of those metrics or benchmarks that someone should be looking for?
Yeah. So I'm going to qualify the question, compose my answer or answer your question the following way. This is for my world. So I'm in the institutional world. So institutional investors are people with deep pockets. So they're professionally managed organizations that are doing larger transactions. And that's not the only way to be successful. So in the institutional world, to be a suitable candidate for an institutional buyer, you generally need more than about $1 million of, the term that people use is EBITDA. EBITDA just basically translates to cash flow profits. I'll mention, because we hear this a lot, people will say, oh, well, if you look at my financial statements, I don't book $1 million in income because, I work with my CPA to minimize my taxes. Every business owner does that. So the analysis that these sophisticated buyers use is to back out all of the expenses that would be associated with an owner-operated business. So, everybody, runs vehicles through their business and maybe has real estate investments, and just, they use various smart strategies to minimize their tax bill. So all of that gets, I would say, added back or reversed. And then in the institutional world, I would say 1 million of I'll just use the term cash flow. 1 million of cash flow, or free cash flow, is kind of the minimum threshold. At 2 million, there's more appetite. At 5 million, there's even more appetite. And at 10 million and above, people are standing online, excited at the opportunity to have a chance to meet you. So there's definitely, a universe of buyers at every size range. The more you, from that $1 million threshold, it doesn't make much of a difference. If you're at 20 million and you go to 30 million, it's the same universe of potential buyers. But the universe of potential buyers expands pretty dramatically as you go from 1 to 10.
Now, when you say free cash flow, does that mean that my net income at the end of the day is $5 million or $10 million or $3 million? Is that what free cash flow is referring to?
No, free cash flow it's when you unwind or reverse all of the expenses in a business that would not be present if it was investor owned. So it like puts the business on an arm's length basis. So let's just say, as an example, a lot of business owners say, hey, I'm making a lot of money. It's kind of silly not to, for example, lease or buy a car and expense that. Well, if you were the CEO of this company and it was owned by an investor, the investor might say, well, I'm paying you a good salary. You can pay for your own. You don't pay for your own car. So it's those kind of expenses that wouldn't be present in a arm's length. If there's an arm's length relationship between the people who run the business and the people who own the business, you're reversing out those types of expenses. So I would say generally every family, every closely controlled business we look at, there's hundreds of thousands, if not millions of dollars of expenses that get reversed out.
Right. So a guy who's doing 2 million in net in a privately owned business, he might have 2.5, 3 million in free cash flow. Exactly. All right, that's awesome. That makes it super, super simple. What is there any other metrics that are important to look at?
So a lot of it depends on seller motivation. So they're not necessarily metrics per se. It's more, does the owner want to leave? Does the owner want to exit and go and do something else and have somebody else take over the business after, let's just say there's a 3 or 6 or 12-month period to transition? Does the owner want to take some chips off the table? Maybe sell 60% of the business? One popular form of transaction for people that are mid-career, not quite at retirement age, is to say, hey, and this kind of comes back to the lifestyle issue that we were talking about, a few minutes ago, is, I've been grinding and grinding and grinding for 20 years now. Maybe somebody else could grind for a while. And so you see a lot of people who say, I wouldn't mind bringing in professional, disciplined capital to take, let's say, 60% of the business. I'll stay involved. I'll continue to own 40%. They'll take another 5 or 6 years. They'll 3x or 5x the value of the business because of what they can bring to the table. And then, so a lot of it, it's not, like I said, it's not necessarily a metric per se. A lot of it is about what's the seller's, what's the owner's motivation? Where are they in their life? Another thing that's not a metric is a lot of owner founders I mentioned earlier about marry somebody that's, smarter than you. That's not just advice for business. That's advice for life.
Right.
Like, that's the one thing every man should do is recognize if your wife isn't smarter than you, You weren't thinking straight.
What happens when the women are thinking that same thing?
But it's, did you surround yourself with talent? I think that's the one thing that a lot of privately held companies fail to do, is they fail to surround themselves with talent. And so that, again, that's not a metric. That's more of a qualitative measure.
Man, that's awesome.
I will mention one metric. Don't be too reliant on a single customer. That's one metric that sometimes people lose sight of. So people refer to that as customer concentration. So, if you have more than, let's say, 10 to 15% of your revenues coming from one single customer. I've had a couple of clients that were heavily reliant on a single customer, and that just became a real concern because the buyer is thinking like, well, okay, that's binary. Like that could go to zero. Even though you love them and you've been working with them for the last 5 or 10 years, it's a risk factor. So that one is a little bit more of a metric.
That's a good note. Man, this has been an awesome show. You have so much wisdom and knowledge. It's awesome to just hang out with you. What are some common mistakes that don't make businesses equitable? Like somebody is thinking about selling, they've put in that 20 years of grind, they are ready to go, but there's just some misses, some things they haven't done right to prepare themselves for. What are some of those common mistakes that you see business owners making that might not give them the valuation they want, that might not make their business equitable, that don't give them the return that they think they're going to see in their mind?
That's a tough one to answer because I think a lot of times some businesses just have a natural limit of how big they can get. So it's not necessarily if the owner made a mistake. Like I'll give you an example. We had a client, this was a deal that was not successful. We could have sold the company, but the seller did not like the price. So we had a business that was kind of commoditized and hadn't built any brand equity. They were very profitable. They were making, I think that when we went to market, they had cash flow of around, I want to say like 6 or 7 million. So like really in that, getting to that fat part of the curve.
Yeah.
But the problem was how they operated, they had no brand equity. They presented themselves to the market as a commodity. And so the buyers were looking to do about 3 to 3.5 times as a multiple. And then, in other words, if the business was making, let's say 7 million, they'd buy it for roughly 20-ish million. And then they were offering what's referred to as an earnout, which is we'll pay you more money down the road if the business continues to perform after the next couple of years. Generally speaking, earnouts are sort of not, sellers are not enthusiastic about earnouts because, well, I don't run the business anymore.
Right.
I don't have complete control. Who knows?
They're going to take advantage of me.
Yeah, they're going to take advantage of me. So they didn't like their valuation. They didn't, this particular client didn't sell, but the problem was they didn't have any equity in the minds of their customers. They were a brokerage firm. They were brokering a product, and so they were 100% driven by the price they were offering to their customers. It was a premium product. They were brokering private jet flights. So they were a little bit like in this, like if you're familiar with NetJets, they were in that, but NetJets is branded. NetJets is a brand name, and everybody's heard of or I should say everybody, but everybody who's a potential customer of NetJets has heard of NetJets. These guys were playing in the same segment of the market, but they were playing as a broker of charter flights. And so there was no equity in the business itself. And so they got a low valuation. It isn't really an unhappy outcome. It's just like, okay, we'll just continue, running this business and, making $6 or $7 million a year. It wasn't like they were in a bad place, but they couldn't get, they thought, well, we want to get 8 to 10 times, or more. And they just misread how the market values business, or I shouldn't say they misread. They didn't like how the market values businesses whose customers perceive them as a commodity. So again, it's not a metric per se, but it's more about building brand equity in a business.
If you are going into business and you want to build a business that's going to be great for the market, Like you want to get the most return on your investment. You want to get something great out of it. Is there a type of business that does better than others, or that you would recommend as, man, this kind of business does great and really gets a return?
I wish I knew the answer to that, but I think even if you have a great idea, it's probably 80 to 90% execution. Like even if you have a good idea, because generally speaking, if you look at the companies that are successful, they have lots of competitors and they're just out executing their competitors.
Out executing their competitors. Man, isn't that a great line? I mean, I got to write that one down. Out executing competitors. I'm going to make a highlight and then put some stars on that, because isn't that just the truth? Man, it's been so awesome chatting with you. I've just got a couple of questions left as we bring this in for a close. First one is, if anybody is out there and they're thinking about selling their business, if they're looking to sell their business, if they think the time is right, obviously, in my opinion, you guys are amazing, cream of the crop, best company out there to work for, to work with, to partner with in these deals. So, such an amazing, genuine team. All the people on your team are amazing. How does someone get a hold of you who's thinking about taking these steps?
Pretty simple. They can go to our website, which is harrisnwa.com. Our website has my email and cell phone number. So somebody could just send me an email, send me a text message, and I'd love to chat with them.
Awesome. Well, listen, if you're out there and you're thinking about it, if you have the idea, if these numbers are clicking off to you, if you're thinking about taking some chips off the table, or if you're thinking about, making another move in life or business, if you want to relax a little bit, or you want to let the whole thing go, whatever you want to do, give Ed a call, ring him up. Great guy. Absolutely fantastic. Do yourself a favor. And, like they say, the best time to plant a tree was yesterday. The next best time is tomorrow. So don't forget to call Ed, because it all depends on the time. And I was going to say, Ed, the thing is, in every entrepreneur's mind, there's one time during the day, every day, where they just want out. It happens every day. It might happen at noon. It might happen at 6 a.m. It might happen at 4. You never know when that time is coming, but it will visit you at some point, and it just depends on, what you do with it.
Dave, thank you so much for those kind words. I want to say the same thing about you. I haven't known you for a long time, but the little bit of time that we've known each other, I just, have a lot of admiration and respect. And your recent journey of becoming a marathon, I'm just glad that I've gotten a chance late in my career to get to meet somebody as dynamic as you are.
Thank you, man. That's so, that's awesome. I love to hear it. I appreciate it very, very much. And, like you said earlier, it's many hours behind the wheel. That's all. It's just reps, many at bats. I think that's what does it all the time. One final question I have for you is, we got a big whiteboard. It's on the side of the road. It's on the freeway. It's a big billboard out there. It's completely blank. What do you want to share with the world?
What do I want to share with the world? Oh man, that is I was not prepared for that question. Don't be too full of yourself.
That's it. That's a great thing to put on the billboard, man. I love that. I'm going to write it down. It's fantastic. Man, this has been such a great show. I've learned so much. I mean, I always learn so much every time I talk to you, and anybody who's out there would seriously be doing them a favor, because, I think there's this, in my mind, when you talk to M&A guys, it's kind of like talking to used car salesmen, but you guys aren't like that. You guys are a genuine firm. You genuinely care. You genuinely give great advice, and it feels like family, when you're in conversation, with you and the team. And
Thank you.
I think that's an awesome way to do business.
Can I just add one other? But
Sure.
Thank you for that very high praise.
Yeah.
And coming from somebody like yourself, coming from you, very high quality person,
Thank
that is indeed high praise. I was just going to add one other thing, which is the segment of the market that we play in. are, for the most part, companies nobody's ever heard of. We're not dealing with billion-dollar transactions. And so our segment of the market is more stable. Like if you look at what's going on in the headlines, some AI company just raised money and they're worth, 50 or $100 billion, or Elon Musk, did something and all of a sudden, a company skyrocketed in value. We're not playing in that segment of the market. We're playing in more of the steady Eddie, somewhat below the threshold level of fame and, name recognition type of companies. And so the market we play in tends to be a little bit less volatile, more stable, more consistent, kind of somewhat disconnected from the stock market. It really doesn't matter, what Microsoft stock price is in determining the value of a company that does, let's say, HVAC maintenance.
Yeah, that's awesome. I think that's great because, the middle market is it, and I'll call it, I might be calling it incorrect, but that kind of just safe and secure. It's what it feels like, just safe and secure. Easy down the path. I like that. That's awesome. Well, listen, if you're out there today and you're thinking about purchasing, or you're thinking about selling, or you have questions, reach out to Ed and the team. Like I said, amazing people, absolutely fantastic. This has been the Entrepreneurial Journey. I'm your host, Dave Westcott. 9:15 a.m. Pacific Standard Time every Tuesday. We are here live and having a good time, live and kicking, as I like to say. We're having a good time. If you like the show, give us a like, give us a share, drop your comments into the comment box, and we thank you so much for tuning in. Ed, it's been awesome to hang out.
Dave, thank you so much.
Mike Bott from Frost Solutions, one of the owners of the company. What we do is provide a mini weather station to give you a tailored forecast to those particular locations so you know where and when and what to do in those parts of town. There's 2 or 3 or 4 or 5 different ways that people can experience tremendous value having a technology like this.
Introducing the all-new Western Enforcer V-Plow. Engineered with all the features, efficiency, and performance of full-size Western V-Plows, built specifically for your half-ton truck. For more information, visit westernplows.com.